Good afternoon or good morning, as the case may be. We are going to begin recording now for this webinar presented to you by Ohio's 529 Plan, College Advantage, and our partners at Fifth Third Bank, College Savings 101. Again, good afternoon or good morning. My name is Ben Gibbons. I am the Director of Marketing for Ohio's 529 Plan. And for today's webinar, I am pleased to introduce Tim Gorell, Executive Director of the Ohio Tuition Trust Authority, Plan Manager for Ohio's 529 Plan, and Dan Beck from Fifth Third. So Tim, Dan, take it away.
Hello, everybody. Thank you for joining us. If you're new to 529, welcome again. And if you're familiar with 529 plans, we hope that this session will firm up any misconceptions you may have about the plan, maybe update you on what the plans can do, and for everybody to be informative, because we feel is a very important topic. We're often asked, what is a 529 plan? And before we get into that, I think we have to get into the why a 529 plan. And the short of it, a 529 plan is about happiness. So what do I mean by that? Well, many people, to pay for education expenses after high school, take out loans, and they can lead up to thousands of dollars in debt once they finish that education opportunity. And then for the years after they've completed that program, to an average of $393 a month, they're paying that off. And oftentimes this comes at the expense of retirement savings, saving for a home, perhaps getting married, perhaps starting a family, any of a number of things. So the happiness aspect, and what I'd like you to think about through the course of our discussion here, is imagine having little or no debt at the end of those opportunities, and that this $393 is freed up for these other things. It's hard to maybe imagine right now, because your beneficiary may be a young child or moving forward, but trust me, there's nothing like it at the end if you're in that situation, because that is indeed happiness. Dan, thoughts about 529 plans as we get started here?
I agree with everything you said, Tim. I think 529 plans are the best way to save for college, and I think as we go through the presentation, you'll see that it'll be very clear, and every little bit helps, right?
Okay, so we'll get a little bit into the why or what is a 529 plan. And 529 plans came about, they've been around for quite a long time, the mid-90s to be exact. Ohio has had an opportunity for Ohioans to save and invest since before that. In the late 80s, the Ohio legislature passed legislation establishing our agency, the Ohio Tuition Trust Authority, and set up the guaranteed savings plan for Ohioans to save for those expenses after high school. The guaranteed plan was based on the weighted average tuition of Ohio's 13 public colleges and universities. And while Ohio closed that plan in 2003, no one was kicked out of the plan per se. And so we still have accounts that we're servicing within that plan. Some other states have guaranteed plans today, and we'll get a little bit more about some of the eaches of 529 plans. In the mid-90s, federal legislation was passed after Internal Revenue Code 529, hence the 529, very, very clever, to establish a mechanism for families to save and invest for those education expenses after high school. These plans had to be affiliated to a state agency, and initially only a few states opened up these plans. We evolved to today where every state, with the exception of Wyoming, has a 529 plan. So what is a 529 plan? What's the big deal about a 529 plan? Again, we put this to make college more affordable. A little bit of a misnomer, because I'll make reference to this is an opportunity for saving for education opportunities after high school. You're going to hear us say a couple times through this webinar, trade school, technical school, any of a number of education opportunities you can use your 529 for. After-tax dollars are invested tax-free. They grow tax-free, and whenever they're withdrawn for qualified expenses, there is not a tax implication. As I mentioned, there's every state with the exception of Wyoming has a 529 plan. And one of the things we're often asked, or what people think, well, if I invest in my particular state's plan, then I'm limiting myself to the education opportunities. Now, we would love for everyone in Ohio and across the country to choose Ohio's 529 plan to invest in it. We'd like everyone to choose an education opportunity here in Ohio afterwards and go on to a career here in Ohio to live, work, and thrive. That doesn't work for everybody. So regardless of where you open a 529 plan or invest in your 529 plan, those plans are universal in regard that you can take those to any accredited education entity across the country. Briefly on our plan here, Ohio has one of the top rated plans in the country. We have two options that we're going to discuss here shortly, a direct and an advisor plan. We're the 7th largest plan. As I mentioned, our official title is the Ohio Tuition Trust Authority. We fall under the Ohio Department of Higher Education. We're overseen by an 11-person investment board. 6 members of the board are appointed by the governor. The chancellor of the higher education is a board member, and 4 members of the General Assembly make up the remainder of our board. And I share this with you because many of the plans are set up the same way. Board members typically do have investment, financial planning, accounting backgrounds, banking backgrounds. And so while we, with our partners, set up or make recommendations as far as our investment portfolio, the board has the ultimate say-so as to what makes it to the investment lineup or what doesn't. This is a very important aspect. 529 plans are nonprofit. Many times people will look and say, well, you're going to reap a big bonus here, because of what you do. And that is not the case. We are state employees. The parameters of our earnings is dictated by the governor's budget, by the Office of Money Management here in Ohio. And again, I think all states are like that. But we are a nonprofit, and our staff and what we work for each day is to just do that. What can we do to help make college more affordable for our account owners, both in Ohio and across the country? Many pieces have been written about the value of college, and this slide depicts that a college degree still does pay off. But I think you could take this a step further. If any training after high school, whether that is a trade school or technical school, whether that's a person is trained to be a plumber or they're trained to be a medical technician, regardless, you pick the entity, it's going to be more profitable for you if you have the appropriate training and education to pursue that endeavor. And the bottom line to it, it's going to cost something. As we mentioned, 529 plans are tax-free. If you want to take away from our talk here, this is one of them, because we'll touch on some other ways to save, which to do, and we encourage everybody to consider saving one way or another. But the appeal of the 529 plans is that they are tax-free. Again, after-tax dollars are invested, they grow tax-free, and whenever they're withdrawn for qualified expenses, you're not going to pay any tax on it. I don't know that we can say enough about the compounding power of the tax-free growth. What this slide depicts is the difference of going a 529 route as opposed to traditional savings. And there is a significant difference, and it gives you more earning power and more resources to get at those education expenses. So I've made several references to qualified expenses, and what this slide here shows is what those qualified expenses, primarily tuition and fees, room and board, books, computers, required fees that are needed for whatever that degree or certificate program requires. New to 529 qualified expenses are apprenticeships, K through 12, and student loans. The K through 12 benefit, and you have to reconcile that with yourself, because K through 12 higher education, education expenses after high school. The federal government has said that this tuition up to $10,000 are qualified expenses per the 529 code. And so you can use that for, again, it's for tuition only up to $10,000 for schools that charge tuition. Student loan repayment, that's been in the last couple of years. You can take up to $10,000 towards student loan repayment and apprenticeships. I think that reflects just our time now with all the infrastructure and the demand for these types of workers and professionals. And it's just not the construction piece of it. It can be technology, it's medical, there's all kinds of apprenticeships. And to some of those, there's an associated cost for the individual, and you can use your 529 for that. A thing to consider in selecting a 529 plan, among others, is if your state offers a benefit. Here in Ohio residents who invest you can take up to $4,000. Now, I would like to invite your attention that it's not a cap. You're not limited. You can certainly contribute more than $4,000. But the Ohio tax benefit, that $4,000 per beneficiary or per account that you contribute, you can take off of your Ohio taxable income. So if you have two accounts and you paid $4,000 into those, you can take $8,000 off your Ohio taxable income. And I'd like to note on this is any Ohio resident who contributes to an Ohio 529 account. So I'd like to remind you, and we touched on this earlier, as to what types of schools or entities can you use your 529 for. And again, this is any four-year college, university, two-year college, public, private, technical school, trade school, certificate program, apprenticeships, and graduate schools. Any education entity that has a federal code that the federal government recognizes and credits, you can use your 529 funds for. And we've looked at and got creative as far as a variety. There's a dolphin training school in Florida that you can use your 529 for. And I share this because you're certainly not limited, with what you can use your funds for. It's from that obscure school like the Dolphin Training School to an Ivy League school. You can use your 529 funds. I'd like to talk a little bit about our two offerings. We have we call our plan. I mentioned that we closed the guaranteed plan, but we have the variable savings plan, and this has two components to it. One is our direct savings side, and the other is our advisor side. For the direct side, I'd like to invite your attention to note that there is no annual account or maintenance fee. It's a little $25 is needed to open the account. That's the minimum contribution. We also offer with that, there's 21 investment options. We have ready-made savings plan, or you can select your options if you choose to go that route. But what we're excited about with our plan is the other option we have, and that's our banking product. Not every plan offers a banking product. And in the times here with the stock market volatility, many people look for other options where they can perhaps preserve their wealth. And we have the banking products to accommodate those account owners should they go that route. And Dan, you want to tell us a little bit about that?
Yeah, absolutely, Tim. I think they are. So we have two options, and these are both FDIC insured. So there's a savings account, which you can, again, open fund as little as $25. And then for those that have some higher balances, they can look at CDs, which these are a great option, again, to kind of preserve your wealth, particularly as your student gets closer to the time that they might start drawing on the funds. It's a great way to kind of protect yourself from volatility in the stock market and still earn a great rate of return as well.
Our other option that we have is if you work with a financial advisor and choose to use that consultation, you still can invest in your 529 savings. Our principal, I would like to note, our other partners in the direct side are Vanguard and Dimensional Fund Advisors, and our principal partner in the advisor side is BlackRock. Again, the same provisions of working, with your advisor. You can either select an age-based investment option or select individual options to save and invest for those education savings. And again, $25 is the minimum contribution. We're often asked, what is the effect of 529 savings on financial aid? The short of it is there's no effect on scholarships and minimal effect on other aid considerations. You're familiar with the FAFSA, the Free Federal Application for Federal Student Aid. This doesn't always equate to free money. There may be some grants or scholarships associated after you fill out the FAFSA. 529s are taken into account, but very, very minimally. It should not impact significantly any kind of awards that you're going to get based on your FAFSA application. The financial aid oftentimes doesn't come in the form of free money. It is loans or resources that do need to be paid back. And so that's a thing to consider. That the bottom line is that your 529 would account for 5.64%, 5.64% of the total contribution that a household can give. So if you just use very simply $10,000 as a basis, $564 of that is counted towards those calculations of what a household can contribute to the education expense. What if a scholarship does come into play? A thing to consider here is roughly 1%, if that, of scholarships are full ride scholarships. And when I'm saying full ride, they're paying for tuition and fees, room and board, books, all those expenses that we talked about. So a scholarship can pay, for perhaps a lot of the tuition, if not all of it, but you still have those other expenses, and your 529 will complement that. Make up the difference for what the scholarship's not covering. If you do have a scholarship that's substantial, you can take up to that amount out of your 529 fund. You would still have to pay taxes. You'd only pay taxes on the earnings. Remember, it was after-tax dollars that were invested, so you'd pay 10% on your earnings, and that would be a qualified distribution as far as that goes. If military academies come into play, counts the same as a scholarship. You can take out the amount of that award or that cost of that academy education, and you would still pay the income tax. If you decided to just take the money out, because and not the scholarships don't come into play, you would pay the tax on the earnings, but then you'd also pay a 10% penalty. So what if your child doesn't go to college? Several factors can come into play here. A thing that keep in mind about the 529 is there is no shelf life, and the account owner controls the account. So whenever a beneficiary turns a certain age, it doesn't 529 funds aren't required to be dispersed or to use. They can go on, because maybe later that beneficiary may decide to go to school, or maybe there's resources available to pay for the undergraduate, and either they want to change careers or they want to go on to advanced schooling in that particular discipline. Those 529 funds are continuing to grow in that period. If the case is that the intended beneficiary is not going to use the 529 fund, very easily you can transfer this to other members of the family. It could be other children of yours, other grandchildren's, nieces, nephews. Very broad definition of what a family member is. The range goes from a first cousin to in-laws. So there's great flexibility that somebody else could use these funds for their education expenses. It comes up too about other ways to save. And a thing that we would like for you to take away here this afternoon is that save. We invite you, encourage you to consider the 529, but save. And so other investment tools are available, and talk about different ways that you can save. But then in some of those, as I mentioned, when a beneficiary becomes a certain age, the beneficiary takes control of those. And then also there may not be the same tax benefits that a 529 affords. We're asked about gifting as well. And this is something we would encourage individuals to consider. We hear from parents and grandparents alike that kids have enough stuff. And consider a 529 contribution as a legacy gift. We have a very easy platform. It's a UGift platform that once you open your 529 account, you get a gifting code. And you can share this with family and friends. They go in, put that code in, and can make contributions to that beneficiary's 529 account. No personal information or account information is shared. It's safeguarded. It's just that code that links to that account so that contribution can be made. Occasions for giving gifts, the traditional ones: birthdays, holidays, special occasions. A great a gift to give to a beneficiary. Again, it's a legacy gift. We even have gift cards. If you contact us, we'll happily send out cards that you can inform that recipient that a contribution's been made to their 529 account. We've made several references to planning. Start a plan. It's very difficult. The best time to start is whenever a baby is born. We don't know what that child's going to grow up to be, what kind of school or education opportunity or training opportunity they're going to go to. But it's important to start. And the best time is whenever they're born. Life gets away from us before we know it. That baby's in kindergarten, middle school, even high school, and you're looking at those educational opportunities. So if you hadn't started when the baby was born, consider doing it today. One of our partners, in fact, it was one of our Fifth Third partners, like to say, when's the best time to plant a tree? Well, it was 20 years ago. The next best time is today. And so it's important to start. You can very easily start your plan. I like to back up because to share like my opportunity. Our children were born in the early 90s, and this was before the 529 plans came into effect. But we opened up mutual funds as far as savings for them. We contributed them, much as like I'm encouraging you to consider. As our children grew, we were very disciplined. We didn't raid those accounts for other things that came up along the way. The thing of it is, though, those were regular mutual funds. We paid taxes on the dividends. We paid taxes whenever we withdrew those funds. Our goal was to save for 50% of our child's education for an in-state entity. We didn't know where we were going to live. I was in the Army. I was a career soldier. We moved around, but we stuck to that plan. And at the end of the day, we had the resources available because, like I was telling you about other scholarships and other resources that came into play, and this savings supplemented it. And the best thing for us would have been to have the 529 and to do the same thing, because we would have had even more resources to address those education opportunities. When you are planning, and you wonder, well, how much is 40% for an in-state school? How much is the things cost? There are many tools out there, or calculators. I would invite you to our webpage to look at our calculator. We have every school. Remember, I told you the accredited schools. If you want to pick a school here in Ohio, say the Ohio State University, or you want to pick a school in Texas, University of Texas, and any school in between, you can put that in there and to anticipate how much it's going to cost in the out years here, and what your future, how much you should be contributing. If you're already saving, I had an account owner ask me recently, how am I doing? And so, well, let's look at the calculator. And so this account owner's beneficiary lives in Tennessee. They're looking at an in-state school in Tennessee. He plugged that school in there and came away saying, wow, we're doing pretty good, because his beneficiary's son is a freshman in high school right now. And so it's an ongoing thing. And just because you started with one plan doesn't mean that's fixed. You're locked in. You can adjust as things change along the way. Very easy to enroll. I got a little bit ahead of myself here. That previous slide, you can go visit our website and open an application. If you prefer paper, you can either have us send you an enrollment kit. We can do that, or you can call us. We cannot give you financial advice. We cannot tell you which plans to invest in. We can share the information to facilitate you enrolling to make it easier. We can tell you about our products. And the thing I want to add about our call center, it is world class. It is first class. You call, somebody's going to answer right away. Another feature that we have that we launched this past year is a mobile application. It's a sign of our times. We do banking, we do so many things on our phones, our financial services, and your 529 account is not an exception. We have this in conjunction with our record keeper, our other partner, Census, and the mobile app is a great way to access and make contributions to your CollegeAdvantage direct account, just using your cell phone at any time. And be on the lookout in the coming months here. We're going to expand those features so you can do more things to service your account. And to get to that, you go to Ready Save 529 mobile app. Go to your app store and you'll find it very easily. I mentioned several times, resources, and I encourage you, like anything, to plan. What are you saving for? It's just like anything. If you're going to buy a car, you're going to buy a home, you're going to buy furniture, you do your homework, an appliance, whatever the case may be. And no exception as far as a 529 plan. Look for the best what fits your situation at the time. But again, it's going to be for those savings opportunity or those education opportunities after high school, which most assuredly are going to be there. This slide gives you a list of resources. I mentioned our webpage, CollegeAdvantage.com. Visit us there. Our phone number is 1-800-AFFORD-IT, 1-800-AFFORD-IT, or 1-800-233-6734. Other resources, Saving for College. You can compare plans as well as they have calculators and any of a number here. The thing I like to add too, good news coming on the FAFSA front is the application should go in effect this year for 2023 school year is it'll be reduced from 103 questions down to 36, and it'll make it even better as far as that, and takes off some of these other resources to include the way that a 529 plan can impact your awards on that. Dan, anything else to add?
Listen, I think you covered it. I mean, from my personal experience, I have 2 in college right now, and the 529 plan through CollegeAdvantage has been a great asset for us. It's easy to save, it's easy to start. More importantly, it's really easy to to withdraw those contributions when the time is right.
Yeah, thank you for saying that, and not only as a partner, but as a trusted, you trust us with your resources.
Absolutely.
We appreciate that, and it's happiness, right?
It is. Absolutely. Absolutely.
Okay, at this point, that is the formal part, and we would like to talk about anything that you want to talk about. So we're open for questions, and we'd be delighted to answer that. Or if you want us to elaborate on anything that we discussed during the course of the webinar, we will happily do that as well.
Hey, Tim, good timing. One question that just popped up, if you wouldn't mind revisiting and or elaborating for clarity here for someone in the chat, the treatment of how the 529 plan is treated when making financial aid calculations on the FAFSA. What's the impact of having a 529 on financial aid, particularly need-based financial aid, like Pell Grants, subsidized student loans, that sort of thing?
Again, it's minimal, 5.64%. That is not a lot as far as that calculation compared to what the payoff is on the other end to avoid debt or resources that you've received that you have to pay back. Its best case scenario is if the parents are the account owners. If grandparents are the account owner, you might want to talk to your tax consultant and apply a little different strategy to minimize the account that those are. And if the beneficiary, the student, is the owner of the account, same thing. You might want to do some different things because that could constitute a little bit more into those calculations as far as determining the need base. But the 529 account and saving in 529 should not be a deterrent to say, I'm not going to open a 529 because I think that's going to have an adversarial effect on, on my calculations for grants or need-based assistance that I'm going to get.
Yeah. Thanks for sharing that, Tim. I think that's a clear point for folks. It's basically like, would you rather have your savings and have your aid reduced by 5.64%, or would you rather have zero savings and 100% award at the end for the recipient and their student? That's definitely the best way to go with the advanced savings. And I think someone also brought up a question as it relates to grandparents and financial aid, which I know you addressed there. Another question, I'll paraphrase it a little bit. If someone is already in college, if they already have a child or beneficiary in college, is there still a benefit to them saving and contributing to their 529 plan, particularly as it relates to the state tax deduction?
Did anyone feel that one?
Yeah, I think absolutely. The state tax deduction will certainly apply, especially if, if you have someone that's maybe early on in their college career, you still have a few years ahead of you. I think it's a great way to do that, and having the state tax benefit makes it even better.
I would agree, and to use another, to accompany the tree analogy, and there's not a perfect time to do this, and the saying that the farmer that waits for perfect weather never plants. And so, even though it's late in the game, for those points that Dan touched on, we would still encourage people to consider still saving, because you don't know, a lot of students will go back to school. Other things come into play there, and the tax benefit is good.
Absolutely.
And while we're talking about beneficiaries in college, what are the different ways that payments can be made for those expenses when the child's actually in the withdrawal stage?
Again, I appreciate that question, because a lot of time we encourage people, as we've done here, to open an account whenever the beneficiary is very young and born, and people will do that. You'll find it's very easy to do that, as we've shared with you, and then we don't really hear from them until it comes time. All of a sudden, that beneficiary is off to that school, that education opportunity, and how do we pool on those resources to pay for that? Several ways, or a couple ways you can do that. One, you could ask that the payment be directly to the school. And it can be sent directly to the school, and that's cut out. It can be sent to the account owner if you want to manage that. So the payment will be sent to the account owner, or it could be sent to the beneficiary. And about these expenses too, and whether with the school or not, we mentioned, if you recall, that one of the qualified expenses is room and board. So what if the student doesn't live on campus? That you can still use your 529 for room and board expenses off campus, and the limit on that is whatever that education entity charges for room and board. You can take up to that amount to pay for that rent and that off campus housing, and for food and the expenses affiliated with that. And again, that might be a case that you're paying, or the account owner directs that the beneficiary receives the account, because again, the account owner has control over the account, and it will instruct us on the way to make the distribution.
And that's exactly what we do. I have one of my students lives off campus, and so we're able to pay for his rent and utilities and all that through the 529 through CollegeAdvantage. So
here's I think probably a not uncommon scenario for families who have more than one child or grandchild. Let's say the older child has more money in their account than the younger child, which makes sense. You've had more time to save for them. Is there a way to either transfer the money from the older child to the younger child, either while one or the other is in college, or just before that to even them out?
Yeah, absolutely. I think as we saw probably back on one of the other slides, it's very easy to transfer between beneficiaries, especially if there's a common owner. It makes it even easier, and I think even beyond that, right, Tim?
Yes, yeah, it is. And again, Dan can give you advice, but I cannot, but I can facilitate information. And there's a strategy with everything. And the possibilities are almost infinite, because they're, again, that first grandchild or child, maybe does go to a trade or technical school where the expense isn't as much as a four-year college. And so you want to move funds around, or maybe the aid or the scholarship for one was more than the other, and so you want to move that around. Grandchildren, you start off with maybe a couple grandchildren, and then a few more come along. And so there's a lot of flexibility to plan and to address those, apply those resources to address those education expenses.
And I know this was addressed earlier, but I also know we've had folks coming in and out of the webinar. Just to be clear, currently, can a 529 plan be used to pay for any K-12 expenses?
Yes, and that federal legislation provided that. It's been probably almost 4 years or so ago. And so if there's a religious school or a type of school that you're paying tuition, you can take up to $10,000 for tuition per year of your 529 to address those expenses.
Great. Thank you, Tim. Here's a very practical question, not only with the summer, as we're halfway through first semester for those beneficiaries who are in college. How does the IRS know that the expense was used for qualified college expenses? Do you receive a 1099?
Uh, yes, and but it is on the account owner. We don't ask is where's this going for? It says it's being paid out to the beneficiary, the account owner, and we don't have any reporting mechanism. Whenever somebody requests a withdrawal, we communicate to them, and we assume they know what the rules are for that. And so we would come into play as if you were audited for some reason, that either by the state or the federal government, and you were asked a question about your withdrawal from your 529 account and what you used it for. You would need to say, here was the tuition bill I paid. Here's the room, the rent agreement that I paid for this. Here's the computer that I bought. Here were the book expenses. Those types of things that you can qualify that distribution.
Yeah, absolutely. And the example that I used earlier, we kind of I keep a spreadsheet because it's kind of what I do. But we just keep track of anything that was not paid to the school specifically, because that we always will have records for, but especially for things like, board in particular, so for food and things like that, or if you buy a computer, we just make sure that we keep all of those and make sure that they're reasonable.
So, Tim and Dan, another question. I believe this was just confirming from what was shared earlier. Is 2024-25, is that the school, is that the school year where treatment of 529 plans owned by a grandparent is going to change on the FAFSA form? And if so, what's that change that's on the horizon?
It is. It nearly takes it off as a question from the FAFSA. And we can put out again of when this is going to take an effect, because it was supposed to take effect the 22-23 school year, and it's delayed. And do you know for sure when that comes into effect?
I don't know for sure.
But it is soon, and it appears it's going to be a real it's really going to happen. It's not tied up in the committee or stuff like that. And so that'll basically take that disparity in the treatment of those resources off the table.
And I think a good corollary or refresher just coming from that question, just to reiterate, who can open an account? Who can open a 529 account for a child or a grandchild or a niece or nephew or whatever the case may be?
Anybody. That is the short of the answer. Anybody can do that. Again, ideally, it is parents and grandparents. And funny, if you're familiar with our ads, we ran one recently about we researched that parents and grandparents don't have the conversation with each other. And the statistics showed that a very high percentage, nearly like high 80s, 87% of grandparents want to help their kids and grandkids, with saving for education expenses, because behind retirement and perhaps a home, this is one of the biggest concerns that people have: how to pay for education. And about 90% of the parents want their parents to help with that, but they don't ask. So have that conversation, and it'll be all the better. But getting back to it, I mean, we have just again, the scenarios are limitless. We have aunts an aunt that says, "I want to take care of my nieces and nephews. They, and can I open a 529 account for them?" Yes. Godparents, we want to do this. And it just even maybe it's close friends. And so virtually anybody can open an account. The account, the beneficiary needs to have a social security number. So that would need to be provided. And again, that account owner controls that account and directs that account. If you don't have a social security number, and what I'm getting at here, we've heard from soon to be parents that they're going to have a baby in a few months and expecting this addition to their family. And they said, well, when the baby's born and has a social security number, we'll open a 529. You don't have to wait for that. You can open the account with the account owner's social security number. And whenever that baby comes and has a social security number, you can change very easily, change that beneficiary, do that online, change the beneficiary to the newborn.
So I think a somewhat distinctive question here, but I'll read it back as worded. Are there incentives to use your Ohio 529 funds on state schools within Ohio?
No, I mean, as we said, whether you're attending a school here in Ohio or in New Jersey or Minnesota or Arizona, Florida, wherever the case may be, obviously you're going to pay more for out-of-state. If it's a state school, out-of-state opportunities. States like Florida, for example, they have their guaranteed plan where that's tied to a prepaid component. And so there's limitations there that you pick a school and the treatment of that within that state. Ohio doesn't have that. Our guaranteed plan, for those who still are in it, the same rules apply if they want to go to another education entity outside the state. Again, we would love people to choose that opportunity here in Ohio, live, work, and thrive here in Ohio. But aside from that, your funds have the same kind of purchase power, if you might, here in Ohio as they do in other states.
All right. There's a question here, and the good news from our perspective, it sounds like would want to stay with Ohio regardless. But would someone be able to transfer some part or all of their savings in the BlackRock CollegeAdvantage plan to the Ohio Direct 529 plan?
Yeah, very good question. You want to?
Yeah, go ahead. I think that's more your
Yeah,
That's a great
but it is. It's very good because people do move or they do that. They want to change it. If you take your 529 funds in and roll it over to another one, just like you do whenever you change jobs with your retirement account. You're not going to be penalized. And so the short of it is, yes, you can do that. Some people maybe have opened up a 529 plan in another state and they moved to Ohio. If you want to roll that over, you can do that, or you can leave it there and let that continue to work in that particular state and open up an account here in Ohio. So it's very easy to do that and without penalty. Thank you for that question.
So there is a question here that's really asking us to opine and offer financial advice, which I know we're really not going to do during the course of this. But as we've discussed, someone could certainly continue to save while their child's in college. How would they then go about, what are their options in terms of then using some of those funds as their child moves through college or has graduated to use in relation to student loan debt?
Right. It is, an added feature within the last year or two is that you can use up to $10,000 of your savings, 529 savings towards student loan debt. Um, Again, this is skirting it, but a consideration and to share information with you. Perhaps loans are coming into play, but you continue to contribute to your 529, and then at the end of that education opportunity, after the beneficiary is finished, you do have some loans to address. You could take your 529 and apply up to $10,000 towards that. That's not in a given year, and it triggers to me about like with scholarships. Whenever we said about the scholarship distributions, those have to be within the calendar year that scholarship was awarded. Student loan debt is that payment that is not considered that. So you've taken loans as needed, or you may have taken the loans at the beginning of the education opportunity, and it may be a few years later that you come out and then the loan repayment is due, then you can pull your 529 funds and direct those toward that payment.
And then this one is just really more of a housekeeping question or reminder. So today's webinar is being recorded and it will be provided to all those who have registered for the webinar, regardless of whether you've stayed for the entire thing. We will have it available afterwards, and we will also be uploading this to include it at a minimum in our blog post on our website specific to this webinar and any other appropriate channels we can find for sharing that.
If there's no other questions, I'd like to leave part thought, and Dan can I'd like for him to leave with his too. A couple things I'd like to bring your attention to is we like to give away money. We love it, in fact. And we have two promotions in market right now. One is with the Cincinnati Bengals, and the other is with the Columbus Blue Jackets. And these are $10,000 college savings awards. And if you're new to Ohio 529, this is a great opportunity for seed money, so to speak, to start your plan. And if you're already trusting us with your investments, this is great to augment that this savings that you've already started. The way to enter it is you go through our web pages, social media, one email per day. It can be a family affair. The contest will run, or the giveaway will run through most of the NFL season and most of the NHL season. The recipient of this will get the $10,000 college savings award, and then that individual, their family and guest get to be wined and dined by the Cincinnati Bengals and the Columbus Blue Jackets. It's a sweet opportunity for a game, again, food and refreshments. It's a really fun way and a nice way for us to amplify the benefits of 529 and say, way to go. But I'd like to add on this too, if remember I told you that we're a nonprofit. There are no tax dollars that go towards this. These are what we generate, as far as our accounts. We talk about being the seventh largest assets under management accounts. How we operate our agency is generated from that. So in essence, we're a perfect state agency in that we take no money from the general revenue fund, but most importantly, we're not using tax dollars, for these types of events as well. And and finally, as my last thought, as we started this, it's about happiness. It's about savings. It's about financial wellness. It's about a good future. And again, I cannot emphasize enough to encourage you to look at saving for those expenses, because there's nothing like it. And Dan could probably attest that when you're writing the check, so to speak, and you're just saying I'm doing a withdrawal and that's transferred, but there's nothing like it when you get to the other end and your beneficiary is making a good salary, and $390 of that's not going back to pay for the education expenses. Dan, I'll give you the final word.
Yeah, well, thank you. As always, Fifth Third, we're very proud of our partnership here with CollegeAdvantage and the OTTA, and personally, it's been for me, as part of a big part of my job is obviously this relationship and working on with the FDIC insured products. But as I've kind of grown and gotten to know the organization, it really is a first class organization, top to bottom, a great way to save. I really appreciate everybody, taking time out of their day to attend this webinar. I think it's a really important topic, especially in today, right? As college costs, as I know well, are a lot, and I think that the earlier you can get started and take a chunk out of it with a great product here, CollegeAdvantage. I encourage everybody to get started today.
That a good point to end. Thank you very much for joining us.
Thanks so much.
Thank you, everyone. Have a great day.